U.S. economy is about to pull off something really rare. It's something called a soft landing.
So this is apparently what happens when inflation returns to the Fed's target without a recession, and that is a feat that has only happened once during the 1990s. Economist Phil Flynn joining us now to discuss the health of the American economy. Phil, what do you make of all of this?
I think it's overall good news. You see that plane coming in, it was a really rocky, and then it just comes in like that. That's what we're looking for, a soft land. But there was no doubt today. We got a report on U.S. gross domestic product. It came in much stronger than expected. And if that's the case, the odds that we're going into a recession have been reduced dramatically. Now, it's only the first reading that we do get an adjustment to this number. It will probably be adjusted a bit lower, but it did ease some concerns in the market that were really nervous, especially with the incredible sell-off we saw in the NASDAQ. Concerns about the Magnificent Seven, Tesla and Alphabet. The earnings disappointed. It really shook confidence, and we're starting to see a rotation in the market away from tech into other stocks, and that's creating a lot of volatility. And I'm getting a lot of people that are calling me, Sylvia, that are saying, we're nervous. What's going to go on? So I think we're okay, though.
One of the questions a lot of people do have about all of this, Phil, is what does this mean for interest rate cuts?
I think it's highly likely now we're going to get that cut. And amazingly enough, just a few months ago, people were saying, wow, inflation is still sticky. We might not get that cut. But right now, the Fed fund futures are pricing in pretty much 100% chance of an interest rate cut in September. But now there are some people saying that maybe the Fed should act faster and even cut interest rates this month. The reason being is that they've seen some worrying signs that even though the economy is growing, the jobs market may be coming in a bit. We're seeing a dip in manufacturing, a dip in durable goods. So they're saying even though the overall numbers look good, there's warning signs that the Fed shouldn't wait too long to cut rates, or that soft landing might turn into kind of a screechy landing.
Okay, well, apparently a lot of people have been waiting to buy a home because they're concerned about the housing market. And with this news that's coming out, does this mean this could be a good time to buy, especially if they cut those interest rates?
It sure could be. I mean, we've seen home prices pretty much at all-time record highs, and we definitely have seen some softening in the real estate market, the last couple of months. So we've seen, home sales have disappointed. But make no mistake about it, there is pent-up demand for homes because people have been waiting for this rate cut to move. And seeing that we've seen a softening in prices, it would be the perfect scenario to get a rebound in that housing market. And I know I'm talking to a lot of people that, right now are trying to get into a home, and it just is so expensive. The cost to build a home is like doubled and tripled in just the last few years. So there's not a lot of inventory for people to grab onto. So an interest rate cut definitely is needed to reinvigorate this market and give some people some hope.
Yeah, it's certainly more expensive to fill up these days, too. Phil, we were talking about gas prices before we started our conversation with you. They've gone up a bit because of that power outage at the Exxon refinery. So could this get worse before it gets better?
For Chicago, the good news is it's already bad, but it's going to get better. For the rest of the country, it's going to get worse. So this is going to be one of the rare times where, we've already felt the pain. It should come back down. But we're seeing signs in the rest of the economy that oil prices are starting to move back up. Demand globally for oil, everybody was concerned about a slowdown in China. But if you look at the inventories, they've tightened significantly in the last couple of weeks. That means prices are probably going higher. And now, after China surprisingly cut interest rates to stimulate their economy, they'll probably stimulate their demand for oil, and that means we're going to have to compete with China for those same barrels, and that'll drive up gasoline prices ultimately.
Wow, and you are right about that. Our prices are already high. Let's hope it doesn't get worse for us here locally. Thank you, Phil Flynn. Always a pleasure to talk to you.
Thank you, Sylvia. It's great to be here.
Good to see you.
All right.